We see stocks down pretty big for the day. We see gold and bonds up. As always, we start off with the S&P 500 on the weekly chart. And what do we see as far as the candle goes? Now, the S&P 500 down 1.32%, but we see a green up candle forming. These are Heikin Ashi candlesticks continuing to push through the weekly trend line, and again getting closer and closer to crossing over, going up. We also see the week starting off with a derivative oscillator oscillating into the positive. Now remember, we're talking about the price percent oscillator, very similar to the MACD. I'll actually put that at the end, a video we have, training video, on what the price percent oscillator is all about, along with the derivative oscillator, so you understand these are oscillators. And again, the candle that we have is the Heikin Ashi candlestick. I'll put that training on there also. Heikin Ashi candlesticks are different than your standard high, low, open, close. These are actually calculated differently. We like them because Heikin Ashi in Japanese, I'm told, means average pace, and that is what we're looking at. We're looking at the average pace of where the market is still pacing and where it's still going, and we can see from the oscillations on the derivative oscillator and the price percent oscillator, it still is driving up, even though down for the day 1.32%. That's what we see on the weekly chart. Now remember, weekly is still at this point in a confirmed down move, confirmed down move, getting closer to a confirmed up move. On the weekly chart, now that's just the weekly. Now I'm going to shift my mind over, I was already doing a little too quickly, to the 2-day chart. Now that's different. It's in a confirmed up move on the 2-day, but we see a pairing off, a slowing down, a red open box spinning top. Now, this is just the first day of the latest 2-day candle. Remember, markets closed on Monday, so Tuesday represents the first day of this latest 2-day candle. It's, of course, subject to change until the close of the market on Wednesday, and that will finish drawing this candle, but we see the derivative oscillators lost upward momentum. Price percent oscillators also lost some of its upward move, and this red spinning top open box, of course, means indecision at this point, tending down, has pushed through the weekly trend line, hasn't come back through it, still in a confirmed up move on the 2-day chart. But again, we compare all the charts all the time. We look at them as a whole, not just by themselves. So we see where the weekly is continuing to try to push itself up, but it's in a confirmed down move. And until that price percent oscillator crosses over, we don't have an up move on the weekly chart. Now, then we get into the smallest chart. So always start with the biggest, then go to the medium chart, that intermediate chart, and then go down to your smallest chart. So smallest chart that we look at is either the 4 or the 2 hour, mostly the 4. It's just easier. And what we see, and tends to be just as accurate, just means the 2 hour chart, you got to check the market every 2 hours rather than once in the morning around noontime and then in the afternoon to see what's going on. That 4 hour chart, we see things pairing off in the morning and then moving much lower in the afternoon, actually retracing everything it did on Friday afternoon, but not catching up with where it went up in the morning on Friday. Derivative oscillators lost energy. Price percent oscillator is heading down, but has not crossed over yet. So again, no confirmed crossover going down yet on the 4 hour chart. 2-day chart still in a confirmed up move, and it looks like the weekly chart is trying to head toward a crossover. We'll continue to watch. One of my good friends who I've done all sorts of work with over many years asked me today where I thought these stock charts were, and I said, flux. I am not in anything at this point because everything is in flux, and I still think that's an extremely accurate answer. So we go from the S&P 500 to the Qs down even more. 2 full percent down. Now, what do we see going on, though? Nonetheless, weekly, we see a green up candle. I will point this out. Same thing I saw on the S&P. Even though it's a green up candle, if you look at the movement, it's not pushed anywhere near where the top wick popped out over the prior week. So again, some up movement as far as the Heikin Ashi candlestick goes, but weak. Derivative oscillator was positive in the prior week, has gained some momentum going up. That's from the 2 prior weeks. Remember, it's an oscillator. It oscillates. And we see the price percent oscillator trying its best to cross over, even with that 2% down move. So you will just continue to watch and see what happens over the course of the week. We go to the 2-day chart. That is not a red open box candle, but a solid red, which means indecision tending down. Derivative oscillator losing upward momentum. Price percent oscillators also lost some of its upward momentum. And we go to the 4-hour chart. What do we see there? Again, very similar to the S&P 500, down in the morning, stronger down in the afternoon. Crossed over, going down on that 4-hour chart. So again, we'll see how strong this movement continues. Typically, when you have crossovers, things usually stay going in that direction for some period of time. Sometimes they'll cross over and pop right back up. But most of the time, and you can look back in time, when things cross over, they tend to stay crossed over for a while. Didn't see that happen back in if you guys remember, mid-December, how things got sloppy on the price percent oscillator. But most of the time, it's a decent indicator, and we typically expect things once they cross over, even on the 4-hour chart, to go for several sets, several candles of 4 hours. But we'll watch, wait and see. We again are just letting the stock indexes shake out. Now let's move on to 20-year bonds, 20-year government bonds. What do we see going on there? Well, it looks like the week has started off with the price percent oscillator that was flat heading up a little bit. Derivative oscillator still moving, still losing upward momentum, and we have a green green solid candle. So again, that's not a strong green open box candle like we saw happen over many prior days up through the 4th of January. But what we see forming so far is a weak pullback from the downward momentum that had started with the big red down candle that ended on the 2-day chart on Friday the 18th. So we'll just continue to watch and see how things shake out. Like we said, the 2-day chart, first day of this latest, the weekly chart, first day of this of this candle is trying to move up a little bit. Derivative oscillator continuing to lose downward, it's continuing to head down, lose upward momentum. And we go from the weekly to the 2-day, and we see the 2-day crossed over going down back on the 17th. And again, we see a bit of a pullback. That is a green open box candle on this first day of the latest 2-day candle. And again, price percent oscillator still negative. Derivative oscillator gained a little bit of downward momentum, but we do see some pullback there with that up move. And again, remember, the weekly is still in a confirmed up move. So if that 2-day chart rotates over, might give us an opportunity to jump back in to TLT. So the 4-hour chart with all that up movement still hasn't crossed over going up, might happen over the course of Wednesday if there's continued strong up movement. Derivative oscillator flipped over in the afternoon to green. So we'll just continue to keep our eye on 20-year bonds, see what we see. There is no trade at this time because, of course, weekly's in a confirmed up move, 2 days in a confirmed down move. Until they're both moving in the same direction, we don't look for a trade. Okay, next we go. And lastly, we go to gold, up 0.36% for the day. Gold is still in a confirmed up move on the weekly chart, just like bonds, although we've seen weakening over the prior week ending Friday the 18th. And of course, this week we see so far, first day of the latest weekly candle. We don't put a lot of stock in that, but again, we pay attention to it. Red spinning top, so for the day, indecision tending down. But even though there was up movement, we're talking about the oscillations and the way that the candle, the Heikin Ashi candlestick, is actually calculated. Now we see as far as the oscillations go in the derivative oscillator and price percent oscillator, that upward movement is slowing. So that's just what we have left over from the momentum slowing down from when things peaked actually back on Friday the 4th of January. That's where that oscillation slowdown is coming from. So we'll continue to see how that plays out. That's the big wave. Let's look at the medium-sized wave, the 2-day chart. What do we see there? Well, the first day of the 2-day candle is a green up candle with a wick on the bottom. Now, typically, it's a solid green, so it's not a strong up movement. And we saw the 2-day candle crossover going down back on Friday the 18th, pushing through the weekly trend line. And the latest candle, even with the up move for the day, still weak. It's a green solid box candle. As I said, derivative oscillators gaining downward momentum. Price percent oscillator still heading down. So we'll continue to see how things shake out. This candle won't finish drawing until the close of the market on Wednesday, but we go to the 4-hour chart. And what do we see there? Well, we saw things move up from a bottom in the morning and then move up a little more in the afternoon, and we see the derivative oscillator continuing with its downward momentum. Price percent oscillator still a ways from crossing over the red signal line, so we're not calling anything a bottom as far as that down move goes on the 4-hour chart. We'll just continue to watch and wait and see what we see. Again, keeping in mind that the 2-day chart is in a confirmed down move and the weekly chart is a confirmed up move. So until that 2-day chart rotates over going up or the weekly chart rotates over going down, we don't have a trade in gold. Why? Because this entire market is shaking itself out, trying to figure out which way it's going to go. Remember, stocks move a direction, and typically bonds, since they're a safe haven if stocks are doing bad, that tends to be a place money goes to. If stocks are doing really good, money typically flows out of bonds. So they usually move inverse. Sometimes gold can also move inverse to the market. Again, not as much a safe haven all the time as you see with 20-year bonds, but the market's trying to shake itself out, and we'll see how it does. And when we have a clear trend, my friends, we will follow it and do all sorts of practice trades. First rule of trading, don't lose money. Second rule of trading, make money. All the best, my friends. God bless from the whole team here at Charting Wealth World Headquarters.